Hey guys, Dave Keller here with Market Misbehavior. One of the things I like to focus on as a strategist, as an analyst, and as a, let's say, investment therapist for money managers and active investors, financial advisors, is to help people address their behavioral biases. You see, when you learn to invest, what you quickly find out is that you, unfortunately, as a human being, are hardwired to make pretty poor investment decisions. The reason for that are a series of behavioral biases, which academics have quantified and described and categorized and explained as a way to illustrate our inability to make good decisions or our tendency to make poor investment decisions. One of the most common is called confirmation bias. So in today's video, we're going to talk about what confirmation bias is. We're going to use an example, Facebook, talk about how you can unwind confirmation bias from your thinking and apply what traditional technical methods to the chart of Facebook. So today we're going to answer the question, what is confirmation bias? So I've spent much of my career working with professional investors, money managers, financial advisors, and more recently active investors, individual investors, high net worth individuals. And what I will tell you is whether you are just getting started and your account has very few zeros involved with it, or if you are managing a multi-billion-dollar mutual fund, you are just as vulnerable to behavioral biases. The things that often will differentiate experienced money managers and why they find success, why they're able to minimize behavioral biases, which are the things that prevent you from making good investment decisions. The main way that the more experienced investors are able to avoid those is because they've surrounded themselves with systems and routines and resources and people to help them address those weaknesses. And they are honest with themselves. I think just like I tell a lot of my clients, they need to have a better market awareness and understanding of what's happening around them as an investor. I think most individuals, and especially most investors, need to have a good self-awareness, have an honest conversation with yourself. So we're going to talk about what confirmation bias is. We're going to use a chart of Facebook to illustrate how you might analyzing the chart with the confirmation bias blinders on and without confirmation bias, some tricks to unwind from that and think a little more clearly. And we'll talk in particular about the chart and what the technical toolkit is saying right now. Before we get to the chart and a little more explanation, just wanted to say, if you appreciate this sort of thinking about investor decision making and behavior and how you think as an investor, I hope you'll subscribe to my channel. It'd be so good to have you along this journey with us. Also, give the video a like if you enjoy it. We'd very, very much appreciate it. Finally, put a comment below the video. What do you find is the most common way that you run into confirmation bias? Is a certain type of analysis, certain type of chart, certain type of stock, certain part of your day when you find that you are preconceived or predestined to use a little more confirmation bias than you should? Let's get to the chart. So very simply, here's what confirmation bias is. When imagine if you are an investor and your main investment process was to Google a ticker and just see what you came up, see what sort of content came up, right? And you'd basically screen for news ideas. A biased investor, someone basically vulnerable to confirmation bias, might go about it this way. You would think about the stock Facebook, you would think about everything you know about the stock and the company, you would decide whether or not you're bullish or bearish based on all of your experiences up until this moment. And then you would Google Facebook bullish or Facebook bearish, whichever way you were leaning. What would happen if you searched and Googled for Facebook bearish? Well, what you would most likely find were a bunch of articles, news clippings, or videos, commentators, experts, analysts all talking about how bearish Facebook is. And all you would do is just back up your already decided point of view. You've already decided you're bearish. Now you're just trying to gather evidence to make you feel better about being bearish already. Same thing, if you decided you were bullish and you think the stock's going to go to the moon and you just Googled FB bullish, you're going to find a lot of stuff that backs it up. So what you want to be doing is just Google Facebook or just Google the ticker without all that other stuff. That's kind of what you want to be doing, because what that does is instead of searching for a particular point of view, you're just trying to get evidence. You're not looking for biased, opinionated evidence. You're just looking for data. You're just looking for information so that you can take all of that and develop your own point of view. Now, I should say, I am not advocating that your investment strategy should involve Googling a ticker, even that alone. I hope there are other ways that you've found to analyze stocks and analyze charts, especially using the capabilities you have with the charting possibilities on the internet. There's plenty of ways that you can analyze stocks and companies and make your own decisions. And I hope you focus more on the ways that you can improve your own routine of doing so in your own decision making. So when we're looking at a chart like Facebook, let's think about that idea of confirmation bias. And again, the idea with confirmation bias is you decide your point of view, then you gather information. And obviously what you want to do is completely flip that. You want to gather information and then based on the weight of the evidence, make a decision on what you think. So if we're looking at the chart of Facebook, what you do not want to do when you're looking at a chart for the first time is think Facebook, yep, I'm bullish. All right, let me look at the chart. And then you start to look for information. Is the stock going up? Yes. Has it broken out recently? Yes. Are the moving averages going up? Yes. Is the relative strength improving? Yes. Okay, great. I'm bullish. What you just confirmed what you already said. What you want to do is forget about your opinion, forget about what you think about the stock or the company or its long-term prospects, and just look at the chart as if you have covered up the ticker. And that is actually what we used to do a lot of times as a way to try to disorient ourselves on the institutional side. When we would analyze stocks, you'd cover up the ticker and forget that this was Facebook. It's just a data series, and apply your analytical toolkit to the data series. Analyze the price and the momentum and the relative strength and the volume, all of those pieces of evidence, and just determine what you think. Gather all the evidence, then look at what the stock is, look at what the company is, and then think a little more about how that relates to the chart, right? Because a good analyst, a good investor, I would hope, a successful investor, a well-rounded investor combines fundamental analysis and technical analysis together, right? Or fundamental, the information about the company and the management team and the products, and the technical, looking at price and momentum and sentiment. A good investor hopefully combines those two in a meaningful way. That's what I describe a mindful investor as doing, is having a good awareness of all the information, combining them in a meaningful way and doing that consistently. What you don't want to do, though, is use your fundamental analysis. Here's what I think about Facebook, the company. Here's what I think about Zuckerberg and the management team and what's going to happen, how they're going to monetize things. And then I look at the chart as a way to just validate what I already think about the company. You want to look at those things completely separately, analyze the chart, analyze the company, combine those two at the end and see if your interpretation of both sides of that is in agreement or not, and then go from there. So if we have our confirmation bias blinders on, we would predetermine, am I bullish or bearish? What's the ticker? What's the company? Okay, great. I'm bullish on the stock. And now I look to see if I can confirm that point of view by looking at the chart. What you want to do is apply a checklist, right? Apply a very disciplined, rigorous, consistent methodology for analyzing the chart. I have a checklist that I've developed over a series of years over my career. When I've taught technical analysis at the college level, we've actually started at the very beginning and over the semester built up our checklist from scratch to about 7 or 8 steps that would, I think, clarify all the main parts of the technical toolkit. We don't have time to go through that whole thing, but I will tell you some of the basic inputs that I look at. Number one, and this is the very first thing on any chart that I would look at, is Dow theory, which is basically, is the trend going up or is it going down? Is price going higher or is price going lower? And that sounds super simplistic, and it absolutely is. A lot of times we complicate things and we think that that's more rigorous. I would argue if you simplify, you are by definition more likely to have robust results, meaning more repetitive, more consistent, consistently successful results, because you're able to adapt to different scenarios pretty well. So my very first question on the chart of Facebook, are we going up or are we going down? Are the highs getting higher? Are the lows getting lower? What I can see on the chart of Facebook is if you start at the March low, you had an acceleration into the peak really in late August, and it retested that in early September. From there, you had a sideways period. Essentially, the momentum was flat. You can see that it was going sideways. It came and tested the support level around 245, 250 a couple times. The relative strength was going down because this is as the S&P 500 was actually accelerating to new highs going into year end. So Facebook was lagging behind at this point, but look at how that changed here at the end of the first quarter of this year. You bounced off the 200-day moving average a number of times. Now you no longer made lower lows. You found support. You've now broken higher and made higher highs, right? You're starting to break above the previous swing high. The lows are getting higher as well. We now recently have a pattern of higher highs and higher lows. It is pulled back almost to the 50-day moving average a couple times, but is rotated higher. So this chart is by Charles Dow's definition in an uptrend. So check one in the bullish camp, bullish point of evidence, the chart's going higher. Second thing I would look at are the moving averages. Are the moving averages sloping upwards or downwards? Are we near any of the moving averages? And what has happened previously when the stock has approached those moving averages? What I see here is the price going higher above two upward sloping moving averages. And just if you look at the direction of the 50-day moving average, just the slope of it, and if the slope is increasing, the stock is in an uptrend. If the slope is decreasing, the stock is in a downtrend. That very simple measure shows you how looking at price and then the two upward sloping moving averages confirms that we're indeed in an uptrend, and this is in good shape overall. We'll skip down a little bit and go to the very last thing, or one of the last things on my checklist, which would be relative strength. Is this stock outperforming other stocks? And that's a way of answering the question, is this a chart worth looking at, right? Is it outperforming or underperforming other stocks around it? And that can tell you about the relative value of looking at this chart versus others. The relative strength was down from end of late August of last year to the beginning of January, mid-January. From there, you started to change character, sideways move for a little bit, and now the relative strength is going higher. So this is indeed outperforming other stocks in the S&P 500. So just on those very basic measures, right? You have the price going higher in an uptrend, that's a thumbs up. The price is above two upward sloping moving averages, that's a thumbs up. The stock is outperforming other charts, that's very good too. The last thing I might look at would be key support and resistance levels. And when I'm looking at a chart of Facebook, I'm seeing this line right here, which I don't mean to make super bold, but you can kind of see what I'm talking about, right? You rallied up to the high around 300 here in August. You pulled back, you almost got there in November, didn't quite make it. We then came up one more time in mid-March and tested that level again. You then broke out and then tested that level a couple times from above. And that idea where resistance becomes support is a classic technical tool where you basically have a key price level where the market has memory, and a stock finds resistance. Later, it breaks out and finds support at that same level and continues on a little further. What this tells me is it helps me answer that very last question, which is risk management. What's my exit strategy? Let's say the bullish evidence that I think I've confirmed up until this point doesn't work, and for some reason the top end Facebook is in. What would tell me to to reconsider a long position or reconsider my bullish point of view? I think we have a really clear set of levels here. First would be the 50-day moving average, which is currently around 309. I like that one because we've bounced off of it a couple times, and commonly in bull market phases, you will find the stock pulls back to its 50-day moving average. And when that stops happening, when it stops holding the 50-day, that usually is a sign that things are starting to change a little bit. So overall, that would be one level. But the real level in my mind, the real line in the sand would be 300. I like that because that's a level of resistance back here from the second half of 2020, confirmed at the beginning of 2001, and now confirmed as a support level. This is where buyers have come in a number of times in the last couple of months. So if and when the price would come back to that level, I would not be surprised to see buyers come in and push the price back up off of 300. So overall, you've now answered the question. And again, the way that we do this without being vulnerable to confirmation bias is forget what the ticker is. Forget that this is a chart of Facebook. It's just a data series. It's just price data. Analyze the price data and go through a checklist of the key things, key items in your technical toolkit. For me, it always starts with trend. Is the trend up or down? And I use that with Charles Dow's very basic methodology. Look at the swing highs and lows. Are they going up? Are they going down? There are ways to automate that. So on StockCharts, there's an indicator called zigzag, which looks at percent moves and kind of quantifies it. But honestly, it's a visual thing for me. It's pretty subjective, and it's just a very simple view. Is the stock going up or down based on the trends? Then I look at moving averages. I will look at relative strength, look at a number of other things along the way, but the very last thing I will do is an exit strategy. Once I've determined the overall bias, which I would argue at this point, Facebook is a fairly constructive chart. The fact that it's broken out of a base above 300, retested that a couple of times, and if we would pull back, I think you have a real clear line in the sand of support that as long as we would hold above it, I think the stock remains fairly constructive. Overall, it checks that final box, which is an exit strategy. What would tell me that my bullish thesis is incorrect or is no longer appropriate, and where would I agree to change my opinion? So that is how we disconnect from confirmation bias. If you have to cover up the ticker with your hand, do it. But what a seasoned analyst learns to do is look away from the company, look away from the ticker, look away from the stock, and just focus on the data series, focus on the price, and use the technical toolkit, analyzing price, trend, and momentum. Then at the end, Think about your exit strategy based on the determination that you made, and then look at what the stock is, look at what the company is, and think about how that relates to a fundamental analysis of the stock and the company's prospects. And when you find that those are in agreement, then you have a high probability for a company, for a stock that's going to work in your portfolio. So that is my breakdown of confirmation bias, which is just what it sounds like. You are biased to determine your point of view ahead of time, and then you confirm that by gathering evidence. Remember, the process should be 2 steps. Number 1, gather the evidence. Number 2, determine your investment thesis. It's so often that we reverse those. A lot of times it's when you hear something in financial media, when you hear an expert, or hear someone on TV or wherever talking about a ticker. Remember, don't use that as a substitute for your own analysis. Use that as a way to inspire you to dig deeper and develop your own investment thesis. Then go back and compare it to what you heard and see if you're in agreement with the experts or not. If this sort of thinking about behavioral biases, investor decision-making, technical analysis, and data visualization is of interest to you, I hope you will subscribe to my channel. I'd love to have you along the way with me. Also, give the video a like, a thumbs up if you could. We'd very much appreciate it. Finally, put a comment below the video. What do you think about the prospects for Facebook for the next 1 to 3 months? Do you agree that it's setting up in more of a bullish perspective, or do you see signs, warning signs on the chart? What are they and why? From everyone here at Market Misbehavior, I'm Dave Keller. Be well, be safe. Talk to you again soon.